Daily Fiscal Pulse for the 29th of June, 2026. Keep in mind this is a one-day look back on the flows, capturing where things stood as of Monday's close, not real-time conditions. Let's start by framing the current market environment. Equities and broader market moves are the dominant narrative right now. You're seeing headlines like record chip rally adds $2 trillion in combined value to Micron, Intel and AMD in second quarter, and that's clearly shaping price action today. That said, it's always worth filtering through the noise to focus on what the actual flows are telling us. The headline number is a net fiscal transfer of $17.9 billion for the day. What matters more is the underlying trend, which shows spending accelerating. Tax receipts are carrying the load here, coming in at $29.6 billion. The benchmark itself is showing real resilience. ES futures closed at 7,497, which keeps us comfortably above the 20-day moving average sitting at 7,475. The full 20-day range is roughly 385 points wide. Despite these fiscal headwinds, price action remains constructive. Things become more compelling when you pull back and look at the slightly longer view. Daily government spending over the last 5 days is averaging $10.9 billion. Take that against the 20-day average of $5.0 billion, and you're looking at materially more cash flowing into the real economy and ultimately the markets. The year-on-year comparison reinforces this. Spending is essentially flat at $1,072.1 billion, which means there's no major structural shift in fiscal support happening at the headline level. From a positioning lens, the fiscal setup isn't offering a decisive signal in either direction right now. Our conditions gauge is sitting at +20. Context matters though. We've observed similar conditions many times in the past, and even with constrained liquidity, the S&P has still managed to average around +4.6% over the following month. Market movements don't track liquidity perfectly. They often grind higher regardless. There's also the positioning angle. Leveraged funds have been building long exposure, and margin debt is now sitting at the 100th percentile. That's materially elevated. History suggests levels like that tend to function more as a caution than a clear signal to proceed. So practically speaking, even though equities and market moves are dominating the headlines, the fiscal picture is acting as a floor. Negative news gets absorbed far more readily when the government is actively injecting liquidity. We're also seeing 2 days in a row of rising fiscal transfers. Based on our research, that pattern has historically preceded near-term ES strength. It's not a certainty, but it's a setup we monitor carefully. As we look forward, a couple of dates warrant attention. The 30th of June brings the month-end settlement window, which historically can influence short-term flows significantly. The fiscal tailwind is building momentum, and the data suggests there's more upside potential. Whether markets price that in before it happens, that's really where the opportunity sits right now.